The Nigerian Exchange has delivered an impressive year-to-date return of 36.37%, outperforming not only other segments of Nigeria's capital market, but also inflation and prevailing interest rates. From a sectoral standpoint, insurance tops the chart with a remarkable 5.77%, closely followed by consumer goods at 83.69%. Industrial goods and banking have also posted strong gains of 39.80% and 38.69% respectively, while oil and gas remains the lone laggard, down 11.75% year-to-date. Yet, while the upside is compelling, investors must stay cautious, steering through the market's twists and turns without getting burned. Joining me for more on this is Omoefe Orobator, Senior Financial Planner at Moneystart. Thank you so much for joining me today.
Thank you for having me. It's a pleasure to be here.
You can say that again. Well, we know the capital market comprises, other segments, whether you want to talk about the money market or even the fixed income market. But today we're focusing on equities market. So could you tell us or share with us some of the things that makes the equities market stand out from others in the capital market?
Okay, so the equity market stand out because it gives you direct ownership. Also, if you look at the performance of the equity market, like you said, the equity market has delivered above 36%, outpacing inflation and other fixed income securities.
That's quite interesting. So what are the trends that we can see currently in the equities market?
Okay, some trends you can see, key trends. Number one is sector rotation. Like you spoke about, the insurance sector and the consumer goods sector are outperforming the other sectors. So you can see increased sentiment in those sectors. The second thing is FX stability. The Naira has been quite stable, which is also affecting the overall investor sentiment. And also another trend which is particularly interesting for me is increase in retail investors. We're seeing with the likes of Bamboo and Freeinvest, investing has become accessible and affordable.
Right, well, there are so many people who've come to say, you know what, I want to start investing in the equities market, and I think it's okay to talk to them and, tell them some of the things they should do. So before you start investing in the equities market, are there certain level of knowledge or understanding you're supposed to have? What should you know before investing in the equities markets, the pros, the cons, and, things like that?
All right, cool. You have to definitely do your research. With anything you do, you have to do your research. I would speak on the pros. Investing in equities market, it gives you higher return and also affords you higher liquidity. But the con is that it's also very volatile and prices can change rapidly over time. So it is important that you know that there's also some risk involved in investing in the equities market.
So how do you stay safe to mitigate these risks?
Okay, I'll give you 4 strategies. The first one is diversify across sectors. So think banking, insurance, oil and gas, consumer goods. So that way you are not overly exposed to sector-specific risks. So if one sector faces headwinds, gains from another sector can cushion that loss. The second thing I would say is you should plan your exit strategy with discipline. So use stop losses to protect your capital. The third one is take profits in tranches. So don't wait for the ideal price for you to take profits. If your stock has rallied significantly, consider selling part of that investment, locking in that profit, and leave the rest to ride out its momentum. And also, back to the research, you have to stay informed with market happenings.
That's interesting. Well, talking about exit strategy, you talked about stop losses. So how do we go about that?
Okay,
people want to know. So how do I stop my losses?
So it's actually quite intuitive. Even with platforms, I would speak on the platform I use, which is Bamboo. Like there is a...
Are you going to pay for that?
No.
Okay, so don't mention it again.
No, I'm not mentioning it. Well, I want to make it more practical and relatable. So certain platforms give you that opportunity to set stop losses. So you can set stop losses as low as high as 10%. So what that does is it doesn't go 10% below your purchasing price.
10% is a lot, though, depending on how much the stock is.
Exactly.
If I lose 10%, I will cry.
Exactly. That's actually a crucial point you brought out, because it's also important to align your investment strategy with your risk appetite. So some investors can withstand 10% loss and some others can't. So take that into consideration when investing in the equities market, because it is also quite volatile.
It is quite volatile and quite rewarding. Very rewarding too.
Yes.
I mean, we know some stocks that are doing over 200% year to date. Some are doing 90, 50. But I mean, it's rewarding.
It's
actually.
Very rewarding.
Very rewarding. Now, let's look at something, and that's the fact that, we're trying to make, more gains and all of those things. So, and then there is need for you to follow the market, and follow trends and all of that. So basically, what should you do? Is it that the moment you notice that a stock is rallying and you quickly buy it? Or are there strategies? When should I buy a stock? Is it when there is a dip? should I just follow everybody? Because I will always keep giving the Julie and especially Suno Assurances example. Even Owando. Owando gave us beautiful numbers that made oil and gas the best performing sector in 2024. But here in 2025, Owando is in the negative year to date. Suno Assurances is in the negative, over 40% negative year to date. And the way it was moving in 2024, so many people bought into it. But here they are. So how do I ensure I don't get into a bull trap? Because Julie actually has been a bull trap since, was it 2023 or 2024?
Yes, exactly. I'm glad you mentioned bull trap. So it is important that when you're investing based on a rally that's caused by fundamentals. Okay. So you have to ask yourself, why is this price going up? Is it based on speculative trending, or are there strong fundamentals banking it, like earnings potential or new projects that this company is about to undertake? So when you invest based on fundamentals, the market will favor you.
Okay, fundamentals, let's break it down. We say fundamentals, we say technical analysis, and some persons will just be wondering, okay, fundamentals, But I want us to, make it simple for a lot of persons to sort of understand. Talking about fundamentals, you're talking their financial reports. Exactly. You're talking about maybe PE ratio. Exactly. You're talking about maybe EPS. Right. You're talking about maybe dividend ratio, things like that. Or, I mean, just so we understand some of this, that it helps us in making our decision.
Yeah, so fundamental is basically knowing the intrinsic value of a company, the real worth. And you mentioned great metrics to use when evaluating a company, and that is very key. So you have to do a bit of research. You have to go to the numbers. You have to look at revenues.
How can a regular person even know all these things?
Exactly. But there are certain things you can do. It's not as daunting. Obviously, to not be at a level as a financial analyst, but this information are actually readily available. We are seeing companies report their profits. Yesterday, a lot of companies report their profits. So you can see and just look at the numbers. Is revenue growing? Is there cash?
Simple.
Is there cash to meet obligations? Is there enough liquidity? So you can look at these numbers, and you can just start your journey. It's important to start. That's the key.
It's important. How much do I need to have? Do I need to have millions before I start?
Exactly. Investing is as affordable now as ever. With as minimum of 5,000 naira, you can begin your investment journey.
Okay. So when I invest 5,000 naira, and let's say I have the stock rallies and all of that, am I advised to take profit or to rather leave it and build? Because if I take profit at that point, I will feel like my numbers are not going to grow. And for somebody who wants dividend, I mean, like you were talking about, your risk appetite and what you want. Some persons want dividend.
Exactly.
They're okay with just dividend. Some people want dividend and capital appreciation. Exactly. Some people want just capital appreciation. Maybe they are swing traders. It goes up, I go up with it. It goes down, things like that. And so how do we, sort of manage all this?
Yeah, so first of all, like you mentioned, you need to know what type of investor you are. Are you in it for dividends, so you like just stable cash flows? That's fine. Or are you a growth investor that you want capital appreciation, or you're a mix of both? So when you understand that, that's kind of starting.
What do these things mean? Let's explain.
So there are certain stocks, like growth stocks. So they have higher capital appreciation potential, because they don't give enough dividends. So the dividends, the extra cash, they invest it back to the company to take on more exciting projects. So we have also value investing, or dividend investing, is when like certain stocks are notorious for giving out dividends.
What is the word notorious? Notorious is for bad people.
So they are exactly. So they are known for giving out in dividends, and their stocks don't move as much as growth stocks.
All right, we'll take a break now. So when we come back, we'll continue. I mean, I'm enjoying this conversation, I must say.
Thank you so much.
All right, I'll see you after this time out. Of course, she's still right here with me. Stay with us. Glad to know you're still with us. And of course, I still have right here with me Omoefe Orobator, Senior Financial Planner, Moneystart. Thank you so much. All right, before we went on that timeout, I was talking about for somebody who has invested 5,000 naira and, well, depending on the person's, what the person wants. I'm looking at that and I'm saying, even where you've made when you've the stock has rallied and you have maybe from that 5,000 you already have like 8,000 naira capital based on capital appreciation. Are you advised to take profit at that point or to rather build? Because I mean, I'm looking at all of that. I'm like, if your portfolio is still small, should you be taking profits or building? For stopping loss, I can understand stopping loss. Maybe you made a decision and eventually the market doesn't seem to support that decision and the stock keeps going down. You want to stop your loss, and in fact, you can even sell off and, you know, take position somewhere else, right? But for people who still don't have that capital, should you be taking profits or allowing it grow, or it's based on your appetite or what you want?
It's at the end of the day, it's based on the investor and what the investor is looking for. But I would advise that you take profits in tranches. So don't like sell off the entire investment. Still leave a room for that exposure to a potential greater upside.
Okay. And then earlier we were talking about, you know, dividend growth and all of those. Can you just wrap up on all that?
Okay, so yes, I'll just wrap up on that. So, like I said, dividend stocks, there are certain stocks that pay out regular dividend. They don't grow in terms of capital appreciation as other growth stocks. Also, like if you even take it back to like the Nigerian market is quite known for giving out solid dividends, especially in the banking sector. So if you're looking to get in on those like dividend investments, like look into the banking sector.
All right. I know that when you look at the equities market as it currently is, you could see some, let's say, a pattern or some patterns. But for you, which of the sectors do you think is where we should, you know, let me just say, pay attention to?
Thank you for not putting me on the spot and giving me such a soft landing. So first sector you should pay attention to, especially in the medium to long term, is definitely going to be banking. They've given out reliable earnings and dividends. Also the insurance sector, with the insurance capitalization, and that's increasing the capital adequacy for these companies and improving profitability as well. And also you should look into the consumer goods sector as well. Yeah, with increased demand and increased population, that still remains an attractive sector for opportunities.
Oil and gas.
Oil and gas.
Oh my God, I'm still trying to be optimistic because I've spoken to a lot of analysts and they always say, yeah, oil and gas, you know, there are times and seasons looking at what's happening in the global, you know, even globally, oil prices, a lot of instability in that sector, a lot of volatility in that sector. So maybe that's what is affecting investor sentiment and what have you. But really, oil and gas did well last year, really. Maybe it's the Trump thing, right?
Maybe.
All right, thank you so much, Omoefe Orobator, Senior Financial Planner, Moneystart.
Yeah, I'm so happy you had me here.